So the first way we're going to look at is when you choose to enter it as an additional or a separate POS docket. You come into POS, click on F2 Connections, Start Connections. From here, we follow our business rules as normal, select our customer, enter the number that these may be attached to, make our selections, value-added service. Once we've made that selection there, we have no further options here. Next, click on our drop-down to locate our CLV upsell, and then we select the program associated that this particular customer has gone on. Whether it's multiple, you can continue to add as needed. And then we finish. This will create an additional sale attached to it, ready for us to then complete, which means all of this information has not printed on the customer's receipt, because we just don't think, it's something, your customers want to read that, they've been upsell an incentive plan. So that's why we do recommend you go with this method and complete the sale in normal manner. However, for those of you that choose, and it's quite acceptable, okay too, you can choose not to enter it at point of sale time, but alternatively, you can go into have your back of house person doing it as part of their role. Now, we can do it through adjustments in the connections module. However, it can't be done until end of day has been completed. So we'll cancel out of POS and we'll come back into connections module. We'll come down to adjustments, and as I said, unless you have completed end of day, you won't be able to do this. We find the connection that it is related to. GST will be applicable in adjusting the amount of the MRO for this contract if we were obviously adjusting that part. Then we come into connection adjustments. From here, we're going to select the item. If any item, as it notes, items that are unselectable in green will mean that they're not available for selection. We've got the option to add additional service. So in this particular one, it's already ticked because perhaps there was already one there. We come in and we make that same selection. So whether you're adding to an existing one, but perhaps one was forgotten off at point of sale, or there was none in there, it's still the same method. You select the connection that it relates to, you click on the option connection adjustments, it will open up this dialog box, you will then tick add additional services if it's a brand new one for this one, or if you're making an amendment to something that was already there. You make your choice and add and finish. It will then prompt you with a message saying, this is currently what you had in the system. Scrolling down, you'll be able to note what the changes are through what you're doing, and you have the option to either ultimately adjust or cancel. Cancel will remove what you have just done. Adjust will accept it, prompting you to enter in a reason. Your own business rules will apply as to, what your rules are, but, obviously anything where you're doing an adjustment in the system, we do recommend that you always do add a comment, whether it is something as simple as CLV added, CLV upsell added, and obviously defaulting to the applicable date or changing the date if you were inclined to. Once we select yes, it gives us our final warning that not only are we doing an adjustment to an original transaction, this has back-of-the-house ramifications, because ultimately, by making an adjustment, regardless of what the area is in the system, we're going to be impacting the financial reports. If you're making an adjustment to withdraw, you're ultimately writing off the profit and loss. If you're adding, well, you're increasing the revenue, which ultimately appears on your profit and loss. So anybody that perhaps doesn't fully understand what connection adjustments do, etc., shouldn't be in here doing this, because you are ultimately affecting the financials of the business. So if you're happy to proceed, yes please. And that has now been added. So recapping, it's your decision which way you choose to enter, whether you choose to enter at point of sale or you choose to enter it through adjustments. You also have the option, obviously, to have it automatically enter and apply at time of payment importing. But depending on your own business rules, you will determine what's the best way for you. We think these are probably the best two ways for you to make a selection of handling. Now from here we're going to talk about payment processing. I'm not demonstrating payment processing in any shape or form. This is more just a verbal, which will be covered also in the documentation that you receive. Previously, if you're doing the full payment importing, you had to do a few manipulations to the file, etc., the format. With the new version, whilst you don't need to change the columns, etc., you still will need to remove any fixed items that have come in that payment when you're processing, obviously, your mobile side of it, and also column T on your spreadsheet. Previously, when the remittance file was downloaded from your Retail Live, you'd have the payment type recorded in column T. Signature has been advised of the standard payment types that, Telstra are going to be used, and our iSystem has been updated accordingly to accept these. But these may be updated from time to time, and we have found this even in the last week of since going on to OIC. They've been updated and changed from the Telstra site. So when you guys have gone to do your payment import, you've had payment lines that error. If this is the case and it has happened for you, you will need to either change the payment type in column T to something that ICE will recognise, or manually choose to allocate the payments. So if you find that all of yours are saying value-added service, some of them that are importing may be looking for perhaps something that says value-added incentive service. You need to make sure that what is in column T is consistent in that value-added service is going to be recognised. However, we can obviously, if you need more help with that, contact the support desk. When it's time to do your payment run, we can assist you with your live training then. But unfortunately, we developed this latest version based on the information supplied to us, and it's only sort of come to light in the last week that Telstra have included some different types of payment in column T that our system is not ready to acknowledge because we have not been made aware of it. So in terms of payment processing, please contact our support desk if you want more assistance with your real data. Now, another issue that has arisen since the first was the issue of AROs, accessory repayment options, not available on BYO plans. AROs can only be sold with an MRO at present. This will be rectified in a future release. So at this very moment, your ARO bundling can only happen with an MRO. And again, that's based on system development from original requirements supplied of what we needed to do. Also talking AROs is the impact of GST. Our belief is that GST now applies to AROs. However, you will still need to confirm with CSG for the final decision. But everything that has sort of been put to Signature's way, it would it would imply or make us believe that GST is applicable on AROs. However, only CSG can confirm this for you totally. Now, the last one is a little tick box that's also given people a bit of confusion. We'll close out of Connections module again, and we'll go in and do a simple POS sale. Select our product as normal. Now you'll find when you're doing a new connection, get the key information in. We select our contract. Now you'll note also that once we've made our selection, there is a tick box, apply service only, recontracting incentives. Now, that new option is simply for the sites that the TBC sites who sell a BMA or an All4Biz recontract only. So if you are not a site that is entitled to receive the recontracting incentive, which you would be aware of through your TDA, whether or not you are entitled to that revenue, you only tick that box. If you are not entitled to that additional form of revenue, you do not tick the box. So it is only for the TBC sites who sell BMA or All4Biz recontracts. So we do believe there's been a few people that have come across the support desk with that issue. So quite simply, if you're not a TBC site, you would not be ticking that tick box for recontracting incentive. If you are a TBC site and you're wondering whether or not you are entitled to it, you do need to refer back to your TDA. Now the last area is about the actual ORM model. When we came live into this program, this version, there were some other issues we had to do in terms of mapping all of our revenue accounts. What we need to do is make sure that when the new premise codes were entered, there are old revenue accounts that also needed to be mapped. By now, you should have experienced an error if you haven't done this correctly. However, just to refresh it for you, we come into data maintenance, we come into our revenue accounts. The first thing we need to do is select the OIC premise code and change that type at the top to ORM, which is our old model. And what we need to do is make sure that the bonus and SIM rebate accounts, so the SIM rebate and the bonus account, have been mapped. Even though they no longer get used, they still need to be mapped to the Telstra bonus fee or your applicable GL account. If you're using the standard Telstra chart of accounts, it will be the Telstra bonus fee account. So you do need to make sure that those two items are mapped to that revenue account. If they're not, make that selection by selecting the revenue account and accepting your change. Then you need to make sure under the OIC that these are all correctly mapped to the correct revenue accounts. Without the correct mapping of the revenue accounts here, that is going to impact the display of information into your profit and loss, because it's these revenue accounts that, when created, determine where and how they appear on your financial reports. So you do need to make sure that they have all been correctly mapped, that they have a GL account or a revenue account assigned, and more importantly, that the revenue account that has been assigned is reflective of the form of income. Because if it's not reflective of what it is, your profit and loss will not make sense. So do please make sure that you've done your mapping correctly. So from here, these were the key items that we found that we felt we wanted to have another session with you all just to elaborate more on, particularly with the mapping of your handsets. Please remember it is only a one-off, but it is vitally important that it's done. Without correct mapping, you will not be able to obviously sell that product out through your subsidy connection, or it won't be available for selection. Likewise, finally finishing with your revenue account mapping. Incorrect revenue account mapping will impact your financial reports. So thank you very much, everybody, for attending today. I do thank you for taking time out of your day, and the follow-up documentation, which we will have out to you hopefully later this afternoon, is going to take you directly through everything that we've discussed today. So you'll have some additional notes to support your mapping, as well as all of the other areas. Likewise, this session today has also been recorded, and the link to make it available on YouTube will also be published very shortly this afternoon as well. So thanks again, everybody. Have a great day, and I'll talk to you again soon.